Well, it may have taken over 500 days, but the stock market has finally made a new all-time high. So is this a cause for celebration or concern? Today we'll break down the data that surrounds such all-time highs, and more importantly, we'll look at that 4,800 level to discuss options and the dark pool liquidity that has been going through the markets. We'll also be breaking down CTAs. What are they doing, and what do you need to be looking out for next? So which markets led this rally, which ones are breaking out, and which ones are looking weak? Today, we'll break them all down together. And of course, we need to look at crypto. It was a buy the rumor, sell the fact for the ETF. But will it get worse as we see what looks like Wyckoff distribution? Join us as we cover stocks, commodities, and cryptos for the week ahead. Well, welcome back everyone to The Daily Show. My name's Tom, and we've been running this show for over 3+ years together. If you love markets like we do, remember to subscribe and smash that like button. So it was a pretty green day for Friday, and the options expiration brought with it some massive rallies, particularly Nvidia with a huge breakout during the last couple of weeks, and of course a rally to 600 seeming imminent, which we've been discussing. There were a lot of other opportunities though in the markets, and it turns out that Apple got an upgrade from Bank of America last week, which really got this catalyst off and running. When we take a look at the week in review though, you might notice something a little bit scary. Firstly, Tesla, another retail favorite, not doing so well into this massive week of earning reports. And meanwhile, the rest of the market, realistically not up, down in fact across the board. We saw 285% down days, pretty rare, and then we saw a rally coming through with only a few stocks. So what does this mean for markets moving forward? Well, let's take a look at what happens when we tend to make a new all-time high after 500 trading days. Actually pretty rare. In fact, it's only happened 1, 2, 3, 4, and 5. And you'll see there's some history in the making and already made that has occurred over the last couple of weeks. So what happens a week later after this high? We tend to actually usually see only 40% up in terms of the stats, though there aren't too many statistics across the board. But I think the more prevalent thing is that we do usually have a bullish year. And as we know, we're in an election year, which tends to be good across the board, with really Q1 being the most dangerous component. That's usually around that kind of January to March period. We're up, down, and all around a lot of the time during that period. So what happens in April will matter, so make sure to subscribe to the channel because we'll be driving into the April stats, which are really going to be important for this year. So what happens 252 days later? Well, it turns out that 93% of the time, basically, we are up, and we're up pretty large. So if you're a bull in the market for the long term, you might be pretty happy about those stats, and you probably should be, considering that every central bank around the world is starting to consider cuts. Yes, we've seen another month of pretty much cutting across the board, and this means that we're in a loosening cycle around the world in terms of central bank liquidity. Now, we already knew this, but what it really means is probably something's broken, because remember, central bankers do not, and I posted this over on our X, central bankers do not cut out of the goodness of their heart. They generally do so because something's broken and they need to, let's say, fix the economy as best they can. Speaking of things that we need to be following, though, is going to be this, CTAs. Now, everyone's been talking about them for quite some time, and we already know they're super overbought. And this will mean that eventually they go back to being more neutral. But the key here is going to be that while we see these CTAs so high, that's actually a cause for concern to the market moving forward. But a lot of the time, what will happen is the market will rally a little bit more, and then it will sell when the CTAs turn their point. So this will be something that we're looking for on the markets moving forward. And although we might be going into a squeeze, which we'll talk about later on, we do need to be watching the CTA chart. So stay tuned to the channel. We'll bring that up throughout the next couple of weeks. Let's also discuss which stocks led this rally. Of course, we've had Microsoft, my favorite stock in the market, Nvidia, most other people's favorite stock in the market, Apple, which didn't do so well, but then it got an upgrade, and the rest. It hasn't been a high breadth market, which we've discussed several times, but really the biggest concern has to be this. The first time in history that we've ever seen it. The Russell 2000 still in technically a bit of a bearish market. Now, you could argue it's come out of the negative 20%, but at the time of recording, it is negative 20% from top to where it is now, while the S&P has made an all-time high. We have just witnessed something that has never happened ever in the market. It's pretty amazing, and it is kind of a cause for concern when you think about it. It looks like winners are taking all in the markets right now. When we go over here and we discuss the number of stocks above the 200 SMA, obviously that's been declining, but at the same time, markets have been rallying up. And this is because only a few stocks have really pushed us through. And it's a breadth discussion that we've had for some time. Now, you might think, well, that means that small caps should do better. And of course, last year when we were discussing it in December and November, we were talking about small cap outperforming large caps due to a seasonal event. Now, they did do that. And of course, they got to some TP zones that were pretty good. But it turns out that if over the longer term, of course, small caps may not perform as well as you may think. In fact, everybody now is thinking that small caps are going to outperform. And you'll notice that when we go to these levels, oftentimes what will happen is it's kind of a contrarian indicator. Large caps in capitalism, especially if it stays the way it is, usually do take all. And it's because winners take all. And a lot of the time, companies like my favorite, which is Microsoft, will buy the competition and then, of course, bring it into their business and become even larger. So monopolies can become larger over the next decade. And I would think, considering also the number of banks that are shrinking in the US, that you may see that across the board. And still, large caps are a pretty good way to go. Small caps will have their time, though, and there will be periods that you'll want to be very interested in them. So let's talk about another market that everybody dislikes at the moment, which is, of course, the Shanghai Composite or the Hang Seng Index or any of these other ones. It actually turns out that even in periods where you might be seeing a little bit of nastiness in terms of GDP and some other things, we do tend to see actually a rallying market. Now, have we seen the bottom for the Shanghai Composite and Hang Seng? We may have seen capitulation in the last week, and this brings up some very interesting points. Here are where supposedly the market thinks there are the greatest credit events coming through. Now, I was surprised that we didn't see China number one here in terms of real estate, because obviously that is a huge concern for the world. But it turns out that US shadow banking, e.g. private credit, is the largest concern at the moment in the markets, with actually China going slightly down from where it was in December 23. Now, I tend to believe both of these particular issues will be held over the next couple of years, although they will eventually be the biggest problem. Remember, the China debt issue and also this private debt issue is huge, and eventually it will come back, but timing will be everything, and I don't think it's coming anytime soon. What do you think in the comments down below, though? Let's now take a look at the markets doing the best around the world. Everybody's discussing, of course, the Japanese market, which is going ballistic at the moment, and then, of course, everybody's disliking the Hang Seng. Now, here's an interesting quote. Foreign brokers tell me that the Nikkei in 24 will do what Nvidia did in 23, while Japanese brokers tell me that the Nikkei will do what China did in 23. And this is a global investor in Japan, according to Bank of America. So which one will do better? Do you think it's going to be the Chinese market this year, or is it going to be the Japanese market? Again, let us know in the comments down below. Very interested to see your opinions. So we discussed this stat a lot, which is the first 5 trading days, and then that leading into, of course, a January, which can be up, down, and all around. Now, so far, it has technically been up, down, and all around, obviously just making a new all-time high, but it has dropped a few times. I wouldn't necessarily pass out on Q1. I do think there's going to be a pullback that's going to go to mean reversion during this period of time. But of course, as a trader or an investor, right now, what is the market telling us? A very strong bullish close, which could lead into a bit of a rally. And maybe we'll see more of what tends to happen, which is kind of like a drop that kind of comes through sometimes in Jan, and then a secondary drop that comes in Feb. So could we be going into a bit more of a rally here? We'll discuss it later on today. Here are some interesting stats about the Hang Seng Index when it meets those capitulation kind of rules. We've got quite a lot of statistical data here, so you can see that 2 weeks later, sometimes we're a bit lower, but that we do tend to actually have a turn, and 87% of the time, markets are up. Remember, Morgan Stanley, I think, downgraded China last year, and that becomes an interesting point because, of course, that's exactly where we usually get huge movements from the Chinese market. Every time they downgrade, the year after has actually been bullish. It's not necessarily true all the time, but so far that's been the way it's played. So let's now take a look at options. And I thought we'd just kind of deep dive to how important this 4,800 zone was. Of course, we discussed it. And in my opinion, leading into the session itself, if you were looking at the options market, you would say the path of least resistance was actually to see the market go down to around 47.60. This was an area that I thought was going to be pretty key for the expiration. But if you were trading the session, you knew 4,800 was the key level. And when we broke through there, a squeeze was most likely going to occur. In terms of how big this zone was, there were tons of calls and puts on it. And you can see there was a positive gamma relationship here. And as we broke through 4,800, the next levels became 4,820 and 4,850 in terms of where the market was going to go to. We already reported on our Friday video that we thought that 4,800 would go to around 4,850, and then breaking 4,850 would probably go to around 4,950, and nothing much has changed there. But I just want to kind of show you the relationship here of the 4,800 level, and when the market broke it around lunchtime, how important that was to see this massive squeeze that came through. And you can see it was actually relatively quick, and in only a couple of hours, it had already made it up to the 4,840, almost 4,850 zone. So this is what sometimes happens when you break a key level, big zones will happen. And that is really one of the main reasons we moved through. Once we got through 4,800, we moved to the next level of least resistance, which was 4,820 and 4,850. If you like those kind of breakdowns, by the way, let me know and we can go through a few more of them as they happen so we can understand a little bit between the positive gamma and negative gamma relationship and the markets and how they rally through. Let's now take a look at moving forward. Of course, 4,800 being the key zone, 4,850 being in here, and 4,900 being also big. 5,000 is no doubt a monster. And when you take a look at it, there's still even puts sitting all over 5K. But this level is going to be a huge one should we ever reach it over the next coming weeks or months. But I think for now, you're going to have to be looking more for the rally than the sell, unless we've gone into some kind of really bizarre false break. And based on the closure, we won't know that yet. That close on the high is a pretty strong sign that there's a little bit higher to go still. In fact, closure on the high usually means that even a pullback will be met by a bull demand to at least get a higher high. Let's now look at what could be driving this week. And of course, it's all about earnings, and there's some big ones coming. Netflix kicks off big tech. Then we've got Tesla, which is going to be possibly the most interesting for the week ahead. And then we have Intel and Visa and so many others coming through later on. I think some interesting stuff here would be where we have all of the stocks themselves. Take a look at January the 25th, a huge amount of announcements coming through on that session. But Netflix and Tesla will be where all eyes are looking. And of course, we'll go through the charts very, very soon. What about the moves though? Netflix is expected to move plus minus possibly 8% plus on the session. Be careful out there if you're not expecting such big moves. Tesla plus minus 7% according to the options market. So it's going to be a volatile week. And I think there's going to be a lot of opportunity post earnings announcements for those kind of levels. I just thought I'd leave this chart in here as well, just to show you that while we're seeing banks give pretty good revenues, that eventually bank revenues do tend to contract actually around these kind of interest rate cuts as they come through. Something of interest because you can see here how banks have often seen sales growth decline with the US 10-year going down. And that could be interesting moving forward. We have seen some big dark pool transactions. Speaking of dark pools, let's go through the unusual ones, and there were so many. Huge amounts of trade coming into quite a lot of exchange-traded funds for Chinese stocks over the last couple of years. Now, one of the things here is we also saw a China bear fund here give a big transaction. So maybe a few people were moving to capitulation, then they've sold out of that position, and they've gone, you know what, great profit, capitulation done. Maybe now it's time to see some turns. We also saw K-Web and a few others getting some large transactions, possibly accumulating a base. What about the US markets though? Well, let's have a look here at the financial markets. And of course, this is like XLF times 3 basically. And we see a huge trade coming in as it goes back up to the highs. We talked about Goldman Sachs last week as it held its lows and it's trying to break out. A lot of these stocks could be an accumulation for now where we break to a new high, but a big transaction coming in. If we end up breaking to a new high, I think we'll know that momentum is on the bullish side in terms of financials. Let's now take a look at Disney. It's been a while since we've been here. Disney's showing some really nice signs of strength last week, along with PayPal, which was, of course, one that we had, and we'll bring it on the charts later. Probably some accumulation occurring on Disney from some bigger players. It's been beaten down for quite a long time now, and it's a stock that's been lagging in the Dow quite hard. What about the S&P 500? Huge trade near the close of the day. And of course, we've already had a huge trade the other session, which was where we thought that maybe bears would try to fight off bulls. As it moved through here, though, squeezes continued. And whether this is a buy or a sell, we don't know. But at this stage, you would have to say the market is looking kind of still pretty rally. Now, what about Nvidia? Someone got close to 600, and I think they've taken profit. Number 16 came through. Big read here for Nvidia, and it's so close to that 600 target. If you've been riding the Nvidia train, I guess well done to you. The good thing about it is it's been technically just bullish, bullish, bullish. There's been no signs really to sell off after that accumulation base. So 600 still really the target for it. 660 the target for economists out there over the next 12 months. So if you're a long-term hodler, maybe you'll still like Nvidia even at the price of 600. Speaking of options, let's continue here with Nvidia, 2.2 times relative 90-day volume average. And you'll notice because it's OPEX, there were so many options being traded. A lot of puts coming through on the S&P. And you'll see here that overall, though, the calls were bigger on single stocks, 58% calls to 42% puts, and 52.6 million versus 39.9. A massive day in options again, being made up of 28% retail on the single leg. So let's have a look here. There were quite a lot of big ones, a lot coming through for obviously all sorts of semiconductors. And we also saw a few things going through for Tesla. Now, a lot of people have been trying to buy the calls here, but it's not been working. The stock was basically flat. We'll go through that very, very soon together. Let's also break down the rotation. Semiconductors doing best, regional banks doing really well, plus 2.53. Some weird transactions going through regional banks as well, which could note that maybe it's in a turning point after a bit of a sell-off. And of course, financials up 1.61. Then we move over to the last 5 days, and you'll notice more of the defensives, which were doing well, are all kind of in the downside. Semis, tech, communications, usually. Let's now take a look at the charts, and we'll start off here with the percentage of stocks above the 20 moving average. If you're a dollar cost averager, then you'd be pretty happy with this. 25 usually being a pretty key zone for potentially looking at markets. And this time we've seen a small bounce. Not enough to say breadth is really improving in this market, but obviously it has turned in recent sessions. What about the US 10-year? You would have not thought that we could be correct on the US 10-year and actually see it go up to 4.2%, yet the markets wouldn't care. But yes, we've actually seen mean reversion effectively occur for yields as they reached that just before 4.2% level and shorted off with a bit of a shooting star. Now, if yields continue to come down from this point, then obviously that's going to be potentially bullish as a catalyst for further rallies in the stock market. But this will be still an important point. I'd set an alert at 4.2 and see how the market reacts around that zone, especially if we break through 4.3. That's going to be a really bad sign for markets. So 4.3, well worth the alert, and 4.2 later on the week. Now, this led into Treasuries declining, which was exactly as we expected, getting back to mean reversion and around that 93 level. Now, we have seen some transactions coming in around these lows, suggesting that someone's trying to build and accumulate a position. So that is occurring on Treasuries. They won't have necessarily stop losses like some of us, but they will be thinking that this is a decent first level. And that's because in general, when we see these kind of US 10-year drops the way they've happened, they tend to lead into further Treasury gains. In fact, the stats were better for Treasuries in terms of general positivity than Treasuries than the stock market over the next 12-month period. So that's an interesting one. What about bond market indicator? Red again, but not really super red or anything. I would say it's in kind of the biggest zone, is in accumulation or distribution. If this starts to sell off big time though, and the markets go up, I'm usually going on the side of caution. That's usually a great sign that you want to be putting in your hedges into the market. Let's now take a look at some of the lead indicators. Firstly, transportation's getting close to a massive turn point for it. At 15,600, that's going to be a positive sign for markets. We talked about the double top, and again, markets started to flounder after this, but they didn't really sell off to mean reversion. They just this just went down and started rallying through. A critical point, though, for these particular markets, including Dow Jones Transportation, because it's a big zone. Then we move over to home builders, and you can see here that home builders was another one that we might be seeing a turn of trend. In fact, this was a turn of trend, and this is a level where you'd usually see shorters come through for home builders. If a new high is made, though, again, squeezes continue on the stock market for now. So interesting point here for some of the lead indicators. Let's move over now to the US dollar. And I think US dollar is at a very critical point. 103, of course, we've talked about 103.80 and 104 for a while. It did rally through last week. Again, markets didn't sell off like you'd usually expect when this happens. Again, cause for concern during this rally. And I wouldn't necessarily feel a huge amount of FOMO around these highs because I do think that Q1 is still going to be a little bit nasty. But you can see here that markets are technically rallying here on the dollar and pullbacks to be met by bull demand. We still think 103.80, 104 is an interesting technicals level for that particular stock or that particular currency in this case. So let's take a look now at gold. And obviously we discussed the idea of 2003 being a key level. Obviously we know our most traded zone. And if you were brave and you bought 2003, you'd be kind of happy with what ended up occurring on gold. It actually rallied back up to that most traded zone and breached out above it. Now, I think it's a big deal. If gold pulls back this week, I could be saying bull buys. So considering GDX is basically floating around with the potential of an island reversal, there could be an opportunity in gold moving forward. And, anything's possible, of course, but statistically, there are some things improving about this shiny metal and what's occurring on the charts. So a decent rally off our key level, a trade around the most traded zone, a new high being formed, and pullbacks hopefully to be met by bull demand. Somewhere around that 2015 could be very interesting this week to see structure build. What about oil? Oh, it keeps floundering. This thing sucks. At 74, it cannot break out. I mean, I've been looking for this for a little while with downward trend obviously sitting around here. 70-50 being the key where we're seeing building and accumulation kind of presenting itself, and 74 being a level that we're looking for breakouts. We're just not getting it. Look at the weekly. Weekly closes another long leg doji, and daily is kind of the same thing. Basically, it's just sitting around 74, unable to break through. Let's now take a look at Tesla. So you'll notice here that Tesla closes on our green line, which is, I would say a semi-support for the markets. We've seen it, of course, hold up before, being the 200 moving average. But realistically, the problem with this particular one, actually, I think this is actually an anchored VWAP, but overall, this is a bit of a key level, and you can see that it doesn't look strong. And because we have a long leg doji, you're going to want to set alerts above these highs, sitting around 224. And that's really because there's no sign of turn structure underneath in the hood for something like a Tesla. Nvidia has continued to rally. We kind of talked about this going to 600 plus. And the reason is because 660 is the average target from economists. And of course, when you get an A, which is the accumulation level, usually B is the take profit zone. We did see a massive transaction come through up here, which I would suggest is an early person saying, you know what, that was pretty sweet. Thank you very much. And it's closed on its high. So it would suggest that there's maybe a little bit more to come. Another market that looks a lot better, and I've seen a few people talking about it now, which is good and bad, I guess, which is PayPal. And PayPal's shown triple bottoming here, beautiful weekly closure. We brought it up on our show last week and obviously brought it up in our Market Masters Club about a day before that. And it's actually returned really well already. So inverse head and shoulders is the argument, and obviously a break of the downward trend. The first positive sign for something that's been actually a horror show for a long time. And funnily enough, it comes off huge downgrades, huge, let's say, bearish bets being made according to the economists anyway, and a very, very strong weekly close. So beautiful rally there coming with a nice wick and breaking out. Pullbacks, you would think, being met by bull demand on a market such as that. What about the Hang Seng Index? Well, it held firm as it comes down to its new low that's potentially here from 2022. Could be opportunity in this one. Obviously, no structure yet, no breakout of new highs, nothing in terms of seeing rallies really coming through, but some large transactions going through a couple of exchange-traded funds, suggesting that accumulation might be there. Only for the brave on this one in terms of traders, and for investors, they're going to be looking for a little bit more in terms of signs. What about Germany? Well, German market has been rallying. It's not quite at its most traded zone yet, which obviously is 16,700-ish zone. And when it comes there, if the bears are going to really resume trend down on this, that's where they're going to try to do it. So German market in focus this week, certainly a key zone to be watching. Let's now have a look at the Aussie market. You can see here there was a bit of a rally like the S&P, but still some problems around 7,500 for the Aussie market. That's where the bears are going to sit. Similar to the German market, they haven't made new all-time highs, nor have we seen rallies similar to the US markets, really because those big tech stocks have been leading the way, not a broad market buyer. What about the Russell? Well, the Russell obviously looked horrible the last couple of weeks, and we predicted this one would fall down. And it did, but it didn't quite get to 1860, which obviously would have been a sweet level to find it. It did get close to the mean reversion, then it rallied back up. So is it out of the woods yet? Well, I think the big thing to be looking at here is going to be a break of the high of the last week. And that's because this is basically a bullish hammer. And if that happens, then we're probably seeing an increased breadth. And especially if the S&P 500 is making new highs at the same time, which probably would be, then we're maybe rallying back up a little bit here for the Russell. So Russell could be one to watch this week. So let's now take a look at the Nasdaq, and the Nasdaq's flying 2 massive days on this one, giving huge percentages. The overall percentage of the Nasdaq was almost 4% in 2 days. And with a closure on its high, you usually think that pullbacks to be met by bull demand. Things like 16,800 might be a worthwhile watch zone to 16,700. And that's where you're going to see buyers. Really, you can't predict that there are any sellers coming through this market until it gets under this block here. And unfortunately, we weren't able to make it back down to 16K just yet, which is where mean reversion was, because the market just seems to be relatively strong. And let's move over to the S&P. This was the key one. New all-time highs. Obviously, the first time we've ever seen a new all-time high with the Russell being so low. But it did close on its high, and it never really made it below the 4,700 zone, which we knew we had huge options at, and therefore we couldn't get to 46. I still would like to see the market get to mean reversion sometime in the next couple of months, but at this point, it looks like it's going to go 48.50 at least. 49.50 to 5K is certainly on the targets, and I think 5K is going to be the really big zone. Somewhere around there is going to be a huge amount of fanfare, and that's where you'll want to be most cautious. But with a breakout like this, with a big weekly close, traditionally, that means pullbacks to be met by bull demand. 4,800, 4,780, those kind of levels could be still very, very bullish on the smaller timeframes, and they'll be ones to watch. Let's move over now to Bitcoin. Now, I've seen a lot of speculation about this, and of course, we talked about the buy the rumor, sell the fact nature of the Bitcoin ETF. We were all correct together on that, so well done, everyone. But, of course, what happens next? Is this a buy climax UT and UTAD in terms of a Wyckoff schematic? Well, we know that 40,500 level closure breakdown would be a big deal. And at this point, you can go either way, of course. You could say, look, buyers are here. Absolutely, I would agree. And if they're able to push back through, and I've set an alert here, you'll notice at about 43,700, I think good things could be coming for crypto. But at this point, realistically, the trend is down. It's got a small minutia rally. It's obviously sold back off. And if we get below 40,200, 40,500 on the daily close, we're probably setting up for something like a 36,000, 35,000 for Bitcoin, and possibly even further selling, 28K being really, I think, the worst case scenario. Why is that? Well, we often see markets like Bitcoin fail into their halving cycle, and then we see them come through quite strongly. So we'll do a special on that moving forward. Make sure to subscribe if you're interested in it. Let's now move over to what's going on around the world in terms of news. And you can see here that it is not really a huge week of news in terms of the US. It's mostly about a few other things. So we've got the Bank of Japan coming out with their outlook report. This will be important, and tentative usually means around 2:30 p.m. Australian Eastern Standard Time, I believe. It would be usually when that comes out. Then we've got some PMI for the ECB zone. We've got obviously PMI for the US coming through on Wednesday at 9:45. And then we scroll down and you can see here we've got some central bank stuff, including the ECB press conference coming out on Thursday, and then core PCE for the US, which often the Fed look at quite a lot. So we do have some big news, but really it's earnings week this week. Watch out for Netflix. Watch out for Tesla in particular. And I think Tesla, after the